Let's get real. Every headline screams recession, inflation, and market chaos. It's enough to make anyone wonder, is my money safe? But here's the truth. Panicking and selling everything is the worst move you can make. What if you could use this uncertainty to build a stronger, more resilient portfolio than ever before? Today we're building a bulletproof portfolio for 2025, a blueprint to help you sleep at night and set you up for long-term success. Welcome back to the Piggy Bank Chronicles. And today we're tackling how to protect and grow your wealth when the economy gets shaky. We'll break it down into my 4 pillars of a bulletproof portfolio, each one a key part of your financial fortress. Grab your coffee, get comfortable, and let's dive into the first pillar. Pillar 1 is the bedrock, the foundation of your investment strategy. In uncertain times, stability is everything. The bedrock is about survival, not explosive growth. What goes into it? High-quality, low-volatility assets. Start with blue-chip dividend-paying stocks. Think Johnson & Johnson, Procter & Gamble, Coca-Cola. These companies have survived decades of market turmoil and keep paying dividends. Why? Because they sell essentials people buy no matter what. That means steady revenue and reliable dividends, even in a downturn. Next, add high-quality bonds, U.S. Treasuries or top-rated corporate bonds. Boring? Maybe. But in a recession, boring is beautiful. Bonds act as a shock absorber. When stocks drop, bonds often rise, balancing your portfolio and reducing volatility. Together, blue-chip stocks and bonds form a defensive core that's tough to break. This isn't the part of your portfolio that'll make you rich overnight. Its job is to keep you in the game for the recovery. How much should you allocate? If you're conservative or nearing retirement, maybe 40 to 50%. Younger investors might go 20 to 30%. The key is to have it. Without a solid foundation, everything else is at risk. Before chasing growth, prioritize preservation. The bedrock is about building a financial fortress from the ground up. Survive the downturn, thrive in the upturn. No matter how bad the headlines get, your financial house stands strong. This is your non-negotiable core. Don't skip it. It's what lets you sleep at night. The bedrock is your first line of defense. Make it solid, make it last. Now let's move on to the next pillar. Ready to build up? Let's go. With your bedrock in place, it's time for pillar 2, the growth engine. This is your offense, where real wealth is built over decades. The core, broad market index funds and ETFs like S&P 500 or total market funds. Why index funds? Because picking individual winners is nearly impossible, even for the pros. Index funds let you own a slice of hundreds of top companies at once. Diversification is key. If one sector struggles, others pick up the slack. Here's the mindset shift. When markets drop, your growth engine drops too. Most people panic and sell. Don't. Downturns are buying opportunities, stocks are on sale. Use dollar-cost averaging, invest a set amount regularly, no matter what the market's doing. When prices fall, you buy more shares for the same money. Over time, this lowers your average cost and boosts returns when the market recovers. Every great investor knows, be greedy when others are fearful. History proves it. After every crash, markets hit new highs. The winners are those who hold and keep buying. The growth engine is a long-term play, think 10, 20, 30 years. It takes patience and discipline, especially when it feels scary. But by sticking with broad market funds and buying through downturns, you set yourself up for incredible long-term success. Don't just survive the recession, use it to accelerate your wealth. The growth engine is your ticket to financial freedom. Stay the course. Keep investing. Let time and compounding do the heavy lifting. That's how you win. Ready for the next pillar? Let's shield your wealth from inflation. Pillar 3 is the inflation shield, your defense against the silent killer that erodes your wealth over time. Inflation means your dollars buy less each year. If your investments don't outpace it, you're losing ground. So, how do you protect yourself? Real assets. First up, real estate. Property values and rents often rise with inflation. You can own real estate directly or through REITs, real estate investment trusts, which pay out most of their income as dividends. REITs let you invest in income-producing properties without being a landlord. Next, commodities, especially gold. Gold has been a store of value for centuries and often rises when inflation heats up. Gold doesn't pay income, but its financial insurance, a small allocation, maybe 5%, can stabilize your portfolio. Other commodities like oil or agricultural products can also hedge against rising prices, often through commodity ETFs. When the cost of essentials goes up, these assets can offset the pain. The inflation shield works alongside your other pillars while your growth engine builds wealth and your bedrock keeps you stable. This pillar protects your purchasing power. Don't ignore it, especially in an era of money printing and stimulus. Make sure your portfolio can weather rising costs. Inflation is relentless. Shield your wealth, stay ahead of the curve. Now let's talk about turning crisis into opportunity. Enter the Opportunity Fund. The final pillar, the Opportunity Fund, is your secret weapon. It's simply cash or cash equivalents, set aside and ready to deploy when markets crash. While others panic and sell, you're ready to buy high-quality assets at a discount. This isn't your emergency fund, it's your war chest for investing. Build it up during good times so you're ready for the next downturn. When markets drop, don't try to time the bottom. Set targets, deploy a portion of your fund as the market falls in stages. Use your Opportunity Fund to reinforce your other pillars. Buy more index funds, blue chip stocks, or REITs at bargain prices. This approach removes emotion and lets you act rationally when others are fearful. Even Warren Buffett keeps billions in cash for moments like these. The Opportunity Fund transforms you from a passive investor to an opportunist. It gives you control when the world feels out of control. With all four pillars, you're not just surviving a recession, you're ready to conquer it. Build your Opportunity Fund before you need it. Be patient, be disciplined. When the time comes, strike. That's how fortunes are made. Now let's wrap it all up. What's your first step? Here's the path forward. There you have it. The four pillars of a bulletproof portfolio: Bedrock, Growth Engine, Inflation Shield, and Opportunity Fund. Combine them for a balanced, resilient strategy ready for anything 2025 throws at you. The most important step: take action. Review your portfolio. What's missing? Too much growth, not enough stability, no inflation protection, no cash for opportunities? Be honest and make adjustments. Share your thoughts in the comments. I'd love to hear where you are on your journey. Building wealth is a marathon, not a sprint. The right strategy makes all the difference. If you found this valuable, hit like and subscribe to the Piggy Bank Chronicles for more. Thanks for watching. See you in the next video.